Hey, it's Josh. I'm here with my friend Joe Fahmy. Joe Fahmy is I call you a momentum trader because those are the stocks that you like to trade.
Yeah, I've been called worse.
But you manage money.
Yeah.
And you're a professional trader for 20-something years, or?
Yeah, about 20 years, yeah.
Okay. And you're originally from Boston?
Yeah, grew up in Boston.
Okay. So I wanted to ask Joe about his process. Joe and I both work in finance, but we both do two very different things.
Yeah.
But I find what you do to be way more fascinating day to day than what I do. So I've been curious to ask you just about your routines. You wake up in the morning, and I think like young traders who are learning what their own process is going to be, and they're probably discarding a lot of ideas along the way, would love to hear, like, what do you do the first thing you wake up? What do you look at? How do you set the table for what's going to happen on a trading day?
Yeah, no, it's a great question. I like to do a lot of my work actually the night before because I like to be away from the market with, emotions calm. In the morning, you got busy with getting news or whatever you could do in the morning. So the night before, I run screens, a lot of fundamental and technical screens that are mimicking some of the greatest stocks throughout history. So what I'm doing is I'm taking
You created these screens.
Yes, yeah.
When you say mimicking, so you looked at the big winners throughout history.
Yeah.
And you said, what did they have? What were the characteristics of them?
Exactly. Yeah.
And then, do they exist now?
Yeah, there's a lot of the sort of William O'Neill studies, the greatest winning stocks for the last, let's say, 50 or 80 years. Okay. And they took what they had in common. The key word is before they took off.
Became
before. And
obviously.
The most common characteristics are earnings and sales growth. In other words, that's one constant that hasn't changed in the last 100 years in the market. If your company is growing their earnings and sales for the most part, your stock's going to do well.
Would you go so far as to say that earnings and sales growth are more important than valuation?
Oh, absolutely, yeah. Because historically...
So the people running their money the last 10 years the other way around are not making any money.
Right, because they got to look at history. Historically, the biggest winners, that's actually, it's funny you mentioned that, one of the characteristics is they trade at 1.7 times the S&P multiple on average. On average.
So it could be even much higher.
Yeah, even much higher. I mean, Apple was 72 times earnings not too long ago. No one would touch it. It goes up 3,000%. Now it's the most owned stock in the world because of the valuation. So a lot of times you get what you pay for. The valuation is high because Wall Street is anticipating the earnings to come down the road.
And in some cases, Wall Street's wrong. In some cases, Wall Street ends up being right.
Yeah.
And you could have a stock that was never cheap.
Right. But if you instantly take in your criteria, I'm not buying a PE of a certain number, you're instantly eliminating all the greatest winners throughout history.
Right, because they weren't cheap.
Because historically, exactly, you get what you pay for. They weren't cheap.
All right, so you've built these screens the night before.
Yeah.
And it's a process of addition by subtraction, right? Because what you're really doing is saying, okay, these I don't even need to know about these. They just don't fit.
Yeah.
I'm not going to be trading them.
I think I've used this analogy before, which is if you are drafting in sports and they ask the coach, you have the 7th or 8th pick in the draft, who are you going to draft? They say the best player available. Right. So the analogy with stocks is, what stocks do you want to buy? I want to buy the best available. And the best are correlating to historically some of the biggest winners with strong earnings and sales growth is one of the characteristics. They tend to be newer stocks and newer issues that have gone public within the last 5 years. So the lesson there is don't be afraid to buy newer names.
Right. They have so much potential because not enough people know about them.
Exactly. Yeah.
Okay, now, all right, so you've done that work, and then you go to sleep having a rough idea of what names you're going to be focused on in the morning.
Right.
So then what? So you wake up, I'm guessing, eat like a very, very sensible breakfast.
Yeah, a lot of coffee.
Right. Okay. But then what goes on?
I'm usually getting my news. I like to look at it as I have a concentrated portfolio for clients, anywhere between, let's say, 10 to 20 stocks.
Wow.
So I try to keep it concentrated. It doesn't mean if we're in 10 stocks, we're fully invested. So in other words, I could have a large cash position too. So on average, let's say position size.
So 10 stocks doesn't mean 10% each.
Right, exactly.
Okay.
Yeah, they could be 5% each.
Are any of these positions ETFs or your equities?
Sometimes, but mostly straight equities.
Okay,
So I'm going with the concentrated portfolio. I like to look at it as like my A stocks and my B stocks. So like an A stock would be something like Amazon that I'm trying to play for a bigger move. And the B stocks might be sort of shorter term swing trades.
Okay. So now the market's going to open. Would your posture change if the futures are down 30 versus up 50? Like, in other words, or you're going after the winners that you want to add
Yeah, I mean,
regardless of what the market says.
right. You hope. I
Okay.
mean, obviously, market direction is part of it. So, what the backdrop to when I want it, like what will determine whether I own 3 or 4 stocks or 15 stocks, will be if the markets are above their 200-day, above their 50-day.
So okay.
So
in,
there's a
in
backdrop.
today's tape, it's July 2018, and not every aspect of not every
Yeah.
component of the market is making a new high, but your stocks are.
Yeah,
those
yeah,
Are
I
the,
mean,
those are the places
It's
where
funny.
action's happening.
I found that active managers correlate more with the Russell 2000 than any other index. I've just found that over the past few years for some reason.
Okay.
Not that I'm only in small and mid cap names, but for some reason when I do my post analysis of my work, it correlates with the Russell. So if the Russell and most of the averages work together, like if they're all making new highs or they're all pretty much in the same direction.
Okay, so now we're mid morning. You've done
Yeah.
whatever trades you were going to do on the open, if you did any.
Yeah.
And some of them are sales, and you don't. I mean, you've spoken with me about this before. Like, you don't have like an average holding period. You're all over the map, and,
Yeah,
and
I
that's
mean-
because you're very flexible.
I'm flexible. I mean, I might buy a stock and then something might come out where I get stopped out literally that day. That's rare, but it happens.
Does every
So-
new long you take have a predetermined stop, or not definitely?
Not definitely. I don't put in the limits. In other words, I'm using. So an example would be I buy a stock and the market comes in for a few days and the stock's holding up very, very well.
Right.
So it just shows relative strength to the market. I would add to that position with the theory of it didn't. The market came in a few percent and it didn't take it down. The other theory is, let's say I buy a position and the market takes off for 4 or 5 days and the thing is stuck. I try to be patient, but I might kick that out because it didn't participate.
Okay, so you've done what you have to do, but then you also have clients.
Yeah.
So you're not talking to them during the day, I'm guessing.
No,
unless
very
there's
rare.
like some very rare
Yeah,
situation.
we do separate managed accounts where my number one goal is to give them visibility, comfort, control of their accounts.
Okay.
So if I, just to use round numbers, if I have 10 clients, I make one trade, 1,000 Apple, let's say everyone gets 100 shares. So
Okay.
so the software does that automatically. Obviously, they get their proportional amount based on the size of the account.
Yeah, you're rebalancing across the accounts, trading across the accounts.
Yes, but at the same time, John Smith lives in Michigan. He can log into his account, see positions, balances, trades in real
Right.
time, just like you log into your Fidelity, Ameritrade, IB, Schwab account, whatever. They can log into their account and see everything, and it's their own account. The only thing is, I'm on the back end making the decisions for them. They
Right.
give me discretion to make the trades for them.
So I'm guessing like 90% of your days look about the same. Like
Yeah.
you're not like one day looking at commodities, the next day looking at
no.
macro data. Like, you have your thing, and that's what you do.
Yeah, I mean, I do my best to watch the tape and see what. I mean, I'm trying to be more patient since it is a slower grinding market. So I'm actually doing less trading. That's one way I've adapted. I used to do more trading before, but I've noticed stocks will make moves, but they take a little bit of time to make those moves. So I'm trying to be more patient. That's one of the biggest adjustments I've made to this market, is to be a little bit more
This
patient.
market rewards patient longs.
Yes.
People that stick
Yeah.
around.
Yeah.
Oh, well, listen, I'm not going to keep you any longer. The market's going to close. I think you have to put on some hedging trades. Listen, Joe is a great follow on Twitter. Are you at J Fahmy?
At
the
J
letter
Fahmy,
J
yeah,
Fahmy.
the letter J, yeah.
And then Joe's got a blog that he doesn't update often enough. I always break his chops. But you can see Joe's, what was it? It's called The Next Big Move. But
Yeah, it's
joefahmy.com.
joefahmy.com, yeah.
So, look, this is not for everyone, obviously, momentum trading. But for people that are into this, people that are looking for some sort of mentorship, I don't think Joe wants to talk on the phone with you, but you can definitely follow him on social media and get a sense of what he does. And who knows, maybe you'll do some more videos. And
I'd love to. I'd be happy to. Hey, thanks for having me.
good to see you, brother.